Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, senior editor at WeissRatings.com. Welcome back to the show, Sean.
Thanks for having me on.
Sean, inflation officially running at 6.3%. That's an insane number, something we might have seen back in the late 70s, early 80s. How's that affecting what people plan to do when they invest?
Yeah, well, we still hear all this talk from Wall Street and Washington, D.C. about transitory and I don't know. I mean, I think people are starting to get a handle on it, but the problem is there's even bigger inflation coming down the pipeline. On our WealthWave website, which is wealth-wave.com, I had a chart on it was on Saturday, I think. Yeah. And it shows inflation in the pipeline because along with officially publishing inflation, the Bureau of Labor Statistics also looks at like further inflation that's being felt by producers. They have stage 1, stage 2, stage 3, stage 4, all measuring the price changes along the supply chain. And so right now, stage 4, which is the one closest to consumers, is actually the lowest. That was up 11.8% in October. Not 6.3%, but 11.8%. And that's kind of our vision into what's coming down the pike. But then as you get further toward the producers, the price increases become drastic, as high, depending on which stage you're in, as 20 or 27%. Now that's the kind of inflation we saw back in the 1970s. Now, I don't know if it'll last long. What everyone on Wall Street and in Washington is telling us is this is going to be short term. But in the intermediate term, I'm expecting inflation to become much sharper. And so that is going to make plenty of people feel uncomfortable. That could cause changes in how people invest, right? Because if you're investing in something and it's not outpacing inflation, why do you want to hold it? That's what a lot of people are going to have to make the decision on as these future inflation numbers come out.
Now, when you're faced with something like that, the cost of everything, I can give an example here in Vancouver. A restaurant, because of the labor shortage, couldn't find a dishwasher. They did find one, but they're paying them $50,000 a year.
Uh-huh. Well, I mean, the weird thing is, and I know this hurts small business owners the most, which is one reason, in fact, why consumer confidence is like plunging, is because small business owners have to raise salaries of their employees in order to keep people. We're at a very rare point, where labor has a real voice in what they get paid. And so you have to pay people enough to keep them. There are some extreme cases, like you said, a $50,000 a year dishwasher. At that point, a lot of people would go do it. I've done dishwashing back when I was in high school. It's not any fun, but, I wish someone had been paying me $50,000. Most inflation will be less extreme than that, but do not be surprised to see double-digit inflation in the next 6 months. That's what these other numbers from the BLS are telling us. And even though the Fed clings to the fig leaf of transitory, I mean, I've been shouting about we're having major inflation coming back since May. And it's quite obvious. I'm sure it's obvious to your listeners as well. Things are going to get more severe. and there will be changes in the economy. One thing that's probably going to happen is those businesses that can automate will automate, because robots never ask for a raise. And the higher labor costs become, the more attractive automation looks. Now, some things you can't automate, and you absolutely need, person-to-person contact, especially in sales and stuff like that. So, some things won't change. They'll have to pay people more money. But in the short term, prices are going higher. Absolutely.
Now, of course, there's a truck driver shortage right now, but maybe people have been scared off of that because we had all these predictions that AI would be driving our transport trucks within a few years. So why invest in that expensive truck driver's driving license when in 2 or 3 years you're going to be laid off by a robot? So go into something else right now.
Yeah, that could be. Funny enough, in my youth, I also drove trucks. I did a lot of things before I settled down. It's a crappy job. It really is. You're taking high risks, and especially nowadays, you are treated like a cog in the machine. Or at least until recently, they did not, on average, treat truck drivers well. And I can see people who are in the truck driving industry, especially in the age of COVID, when, they don't want to mix with people, they don't want to be out any more than they have to be. I can see why people would say, you know what, maybe I should find something else to do. Now, the good news on truck driving is, at the big port out in California, which had so much congestion problems, those congestion problems have eased by 29%. I just saw that on my Bloomberg terminal this morning. So maybe we've seen the peak in that. But yes, if they want more truck drivers, and they can't quite automate yet, then they are going to have to pay them more money and probably come up with better working conditions. People don't like to be treated badly.
Plus, driver's licenses are a state or a provincial concern. Most provinces and states don't have legislation that would allow robot trucks yet.
Well, no, but there are robot trucks being tested. And you can imagine that coming on. Now, there might be something where one political party or another says, well, we're going to take a stand against robot trucks. We need truck drivers. You can't trust a robot because what if some bad guy hijacks the robot trucks and smashes it into cars? I could see arguments like that too. It's kind of a brave new world. We're not actually sure how it's going to work out. But I don't think people should fixate on any one thing. Don't fixate on just truck drivers. Don't fixate on the people working in restaurants and stuff like that. I think people have to come to grips with the fact that, yeah, we're having the highest inflation in 31 years, but it's going to get higher. I'm not predicting Weimar type hyperinflation. That is not what I'm predicting. We aren't going to have things go up 1,000% in a year, but 20% plus inflation, that I can definitely see because that's what's in the pipeline that's being reported by the BLS right now.
We'll have more with Sean Brodrick right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick, especially after the Environment Conference in Scotland, people talking electronic vehicles. But what about the batteries? Do we have enough battery metals, affordable battery metals, if everybody switches to an EV?
Well, my subscribers have been making a lot of money on the bet that prices for the battery metals are going to go much higher. It's been treating us very well. So there are winners and losers in all this, aren't there? One thing that I just wrote about on Tuesday is an alternative to using batteries in cars, which is hydrogen fuel cells. And it is a superior system, but it doesn't have the traction that EVs do. And superior in the way that, like, going way back, Betamax was a superior system to VHS. You may remember that.
I had a Betamax, yes.
Yeah, well, everyone ended up using VHS anyway because it was more affordable and there was more what you might call political will and more acceptance behind it. they made those machines cheaper, they could record longer, and then once that going, everyone started using that, and so the switchover became big time. Also, Sony made some mistakes, basically, it's really too much to get into. We may have seen the same thing with hydrogen fuel cells. On the other hand, you can see why some industries would want to use them, because you can refill a car with a hydrogen fuel cell about as quickly as you can fill up an ordinary car that runs on gasoline. And also you can store much more energy in hydrogen than you can in a battery. I'm saying energy per weight ratio. So you have to carry these big batteries around in order to run EVs. Hydrogen fuel cells just take a small tank. That's all they take. Also, you don't need lithium, right? Now, you do need some things. Fuel cells are made from carbon, platinum, graphite, but the inputs for hydrogen fuel itself are hydrogen and oxygen. Plenty of that around. The oxygen comes from the air, and hydrogen sits in a tank. And the waste product from running your car on a hydrogen fuel cell is water. So, why haven't we gone to that? It's because EVs got much more traction, but there are certain industries that really like hydrogen fuel cells. Things like the buses that are used by like cities and stuff, or trains. You can run a train on a hydrogen fuel cell very well. And so, long distance trucking, you and I were just talking about like trucking. One thing truckers and the companies that own trucks don't want to do is have those trucks sit around for a couple hours while they fuel up. They want to fuel up and go. Well, that's a place where hydrogen fuel cells could find their market. Now you have to build infrastructure for it and all that, but there's a lot of companies that are already doing that. And there are new hydrogen fuel cell trucks that are rolling out of the factories right now. So it's an interesting space to invest in. I have an idea on how people can do that. You have to read my Tuesday column on WealthWave just to get the whole scoop on that. But while I like EVs a lot, and that whole industry is making my subscribers a heck of a lot of money, it's not the only horse in the race. There are other things out there too. And so I think that hydrogen has a lot of potential, and investors who are looking for something a little different should take a look at it.
What's happening with uranium?
Well, the stocks are starting to take a little break. That's okay. As you and I talked, I actually put out a recommendation for people to grab gains on one of the uranium picks we have, just because I think prices can go lower, but I'm still holding plenty of uranium stocks, and we had nice fat gains. So they had a great run up. They're taking a little break. Nothing moves in a straight line. The big long-term picture is still in place, and these funds that come in and scoop up all the uranium they can find, there seems to be a new fund coming out every month to do that. They're making a real difference in the market because prices are made on the margins. And so as they buy up the available uranium on the spot market, that is putting the squeeze on prices. So, yeah, we could see prices go up and down, but the general trend in uranium should be up. And we are going to get to the magic point for some, like miners, that either have low production now, or have idled production, or are considering starting production. We're going to get to the point where the baseline for uranium becomes something they can make money at. And so then we'll see more uranium come to the market. Will that send prices lower? Maybe for a little bit. But on the other hand, the demand picture is just big and getting bigger. We're seeing more demand for uranium all the time. So that's one of my big bullish bets for next year, as a matter of fact, would be uranium. Even though I'm taking gains today, I think the big picture looks great for it.
Anything else you're keeping an eye on right now, Sean?
Many, many things, but nothing we can cover today. We'll talk about it next time.
Sean, thank you so much for chatting with us.
Thanks.
My guest has been Sean Brodrick, Senior Editor at WeissRatings.com. If you have any questions for Sean or any of our other guests, you can send them to info@HoweStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.